Here we're going to take a look at our special purpose journals project number 2 for whitewater kayaks. And so I'm just going to go through some of the transactions and point out what you need to do. Now this first video is on getting ourselves set up. So here is the narrative of the source documents, and you can go through here and you should look at each one and determine what is happening, just like we have to analyze every transaction. What is happening? You know, what are we giving up? What are we receiving? Okay, here, this first one is a memo from B. Ryan, who's the president of the company, to the bookkeeper, which is ourselves. Okay, so this is a memo he's given us to say that we had already issued a check, okay, number 1753 to Northwest Mutual Bank, the amount of $23,1545 for the July mortgage. And it tells you even how much needs to go on the principal, which goes to mortgage payable, and how much goes to interest expense. So what are we doing here? Okay, what are we giving up? Well, we issued a check out of the checking account. So this is a payment of cash. This, we're going to credit cash. Okay, and whenever we write a check out or pay cash out, it's going to go to the cash payments journal. And so you can write right on here that this is going to the cash payments journal. And you can also determine that you're going to, since we're crediting cash, that you're going to debit mortgage payable for $369.99, and you're going to debit interest expense for the $1945.46. So, and in the next one, it's a sales invoice. Whenever we have a sales invoice, that means we're selling on account. Okay, we're the seller, Whitewater Kayaks, and we're selling it to our customer, Denise Hogan, on account. Here's the invoice number. Here's all the stuff that she bought. The subtotal of the sale is $1332.25. Then there was sales tax of $106.58. So the total that Denise owes us is $1438.83. So what journal does a sales on account go to? A sales journal. So you would be putting it in there. And remember, since this involves a customer, we're also going to have to post that right away to the accounts receivable subsidiary ledger. Here is a sales invoice. However, notice that it's from a payroll outlet and it was sold to us. So in this case, we're the buyer. This is not us selling to a customer. This is a payroll outlet selling to us. And so to us, we would actually call this a purchase invoice. We are buying the following things for a total of $5,240 on account from a payroll outlet. Okay, here's the terms, 210 net 30. If we pay this $52.40 within 10 days, we'll get a discount. Otherwise, it's due 30 days from the date of the invoice. And here's the date of the invoice, July the 1st. Of course, we'll be using the current year as our year. Okay, so we're purchasing something on account. Where does that go? The purchases journal. Okay, and what are we gonna? We know that we're on the perpetual inventory system, what do we debit when we're purchasing inventory? What are we going to credit? Okay, here we have, this is a check from Riverside Espresso, okay, and it's made out to us. So someone is paying us, okay, and down in the memo line it says rent check for July, okay, and so Riverside Espresso obviously has a little coffee sort of thing where they're renting space inside of our store. And so this is where we're receiving this cash of $775. We're going to deposit it into our checking account. Anything that involves cash is going to go on the check register. Okay, but also we need to put this in a journal. We are receiving cash. What journal is it going to go into? Cash receipts journal. Okay. Here for KSND TV, they sold us some advertising, television advertising. This is something where it's not on account though. This is not an invoice. Okay, this is like a receipt, okay, that shows that we purchased $8,000 worth of advertising, and it says right here, we issued check 1754 on July the 3rd. BR, that's Mr. Ryan, the boss. Okay, so he's just putting this note here so that, we know there was a check issued of $8,000. So again, we've got cash involved. We got to use the check register, and this is a cash payment. It's going to go into the cash payment journals. Okay, we also have a couple times a month where we have to pay payroll, and you're going to do this similarly to what you did with Pony Rides to Go. Okay, you're going to have, here's your total gross wages for July 15th, 2337.28. And rather than your total deductions, Whitewater Kayaks has a FICA payable. FICA includes Social Security and Medicare together. Okay, so they have a FICA payable, and they have an employee's income tax payable account, which is this FWT. FWT stands for Federal Withholding Tax, okay, which is the employee's income tax that they have to pay to the IRS, and here's the employee's Social Security and Medicare tax that they have to pay to the IRS. So you would debit the various wages accounts for a total of the 233728. You're going to credit employees' income tax for $232. You're going to credit FICA tax payable for $178.80, and you're going to credit cash for $1926.48. Now we are writing checks. The check numbers are over here on the left. Those are the check numbers. If you want to set up your cash payments journal to handle the two different, I think, wages accounts, and plus these FICA and FWT payable, employee income tax payable accounts, you could put this on there. Your other thing you can do is to go ahead and record this in the general journal. if you don't set up your cash payments journal to handle it, then you can just debit and credit those things in the general journal. We also have the employer taxes. The employer has to match the FICA, so there's the 178.80. The employer also has to calculate out FUTA and SUTA unemployment taxes. Here's where they were calculated out. And there's the total employer taxes. Now, again, the FICA is going to go into FICA payable. And I believe there's a FUTA payable and a SUTA payable. So those will all be credited. Whitewater Kayaks owes those out. And then you would debit the payroll tax expense for the total of the $203.35. Now, this does not involve cash, unlike the payroll register, so it does not go into the cash payments journal, even if you had set it up to do this first journal entry. This second one would definitely go into the general journal. Also, the cash register, the check register. Here we have 3 checks that went out. Make sure it goes on to the check register. And down below is the payroll register for the end of the month. Here is our check register, so be sure to fill that out for anything involving cash. If we're debiting cash, we have a deposit. If we're crediting cash, we have a check being paid out or something being paid out, even if it's electronically, and keep up the running total balance. Here is our sales journal, and down the tabs along the bottom, the purchases journal, cash receipts journal, and cash payments journal. I separately gave you a general journal that you can use for those transactions, which typically are going to involve your payroll, unless you change your cash payments journal, and your any kind of returns, whether the customer returns something to us or we return something to a vendor. Those entries are typically going to go into the general journal as well. So here's our sales journal, and in this case, we're debiting accounts receivable, crediting sales, and crediting sales tax payable every time we have a sale. Now, technically, we would have more than this. Because Whitewater Kayaks is on the perpetual inventory system, every time we sell something, we have to debit cost of goods sold and credit inventory. So technically, those should be on here. We should use whatever system they're on, FIFO, LIFO, etc., to figure out the cost and put that in the journal entry. Because I have a separate project involving inventory cost calculations, I'm not going to worry about it here. So we will just ignore that. Just realize in real life it would not be ignored. For the purchases journal, we have only one column that we're debiting inventory and crediting accounts payable. Now, I told you in the PowerPoints that you could make a multiple column purchases journal if you want to show purchases of other things on account. Then you could decide what those are, go through the source documents, and